Welcome to the Future is Gold podcast series, hosted by Alexandra Cosma. We believe in empowering you to take control of your future so you can live the life that you want. And we do that by allowing you to buy, send, spend, earn and secure the world's oldest currency, gold, while being supported by modern technology. At Nauggets, our mission is clear. We're making gold accessible for everyone by giving you the knowledge and expertise needed to make informed and smart financial decisions that benefit you.
Hi, and welcome back to episode 9 of the Future is Gold podcast. Gold is a precious metal that has attracted investors for thousands of years. Its rarity, beauty, and strength give it an enduring appeal. But investors are also drawn to its relatively constant and intrinsic value over long periods of time. It's seen as a bedrock asset that you can rely on in times of volatility. But how do you know if it's right for you to invest in? On this episode, I'm joined by a man who can definitely share some deeper insights, a co-founder and the COO of Nauggets, Yuvraj Singh Bist. We will take a look inside how the gold market actually operates, covering the day-to-day operations and also look at some of the best ways to acquire, secure and store your gold. Yuvraj, can you give us a quick rundown of what your day typically looks like at work?
Sure, Ali. So on the bullion or the physical gold side of the business, my day typically starts around 5 a.m. London time, which is noon in Hong Kong and Singapore. This is when the different players in the trading market, that are banks, financial institutions, precious metal traders, they come up with their codes across locations. Thing is, it's still an OTC trade. That means there is no online portal or an exchange where you place your trades, as you would do for maybe stocks, cryptos or bonds, for example. So what that means is it's that the market participants still communicate over phone. Now, because the value of each trade is significantly high, it involves a lot of phone calls back and forth, negotiating over the price, terms and conditions, and other details. And we can have several such trades during the day. After the confirmation of a trade, we then have to loop in our logistics partners for the delivery or the vaulting service. And it's then when the final delivery and payment happens. Also, because the value of each trade is so huge, accounts are of great importance for us. So we reconcile the books at the end of the each working day. Before a day closes, we have to ensure that the next day's deliveries or payments are in order for locations such as Hong Kong, for example. Now, Hong Kong is 7 hours ahead of London. Hence, we have to plan a day in advance.
I love how old school the physical gold trade currently is. You know, as you mentioned, still operating via phone and email. I feel we will see a lot of changes coming in this field over the next few years, thanks to fintech. Yuvraj, how would you describe the market when it opens in the morning and when it closes in the evening? Is there a change or fluctuation in the price in the span of, say, 8 hours?
Well, unless there's a huge movement of, let's say, 1% of more in the international gold price, which is the XAUSD price you see online, the bullion market quotes are relatively stable throughout the day. Now, in the bullion market, prices are quoted as a discount or a premium to the current international gold price. So, for instance, London could be quoting a $1 premium, while India at the same time could be quoting a $5 premium. For UAE and East Asian markets, is usually later in the evening when there's a higher possibility for international gold prices to be volatile.
And why is that? Why is there more volatility in the evening?
So, well, as it's morning in the US and any major announcement by their central bank, that's the Federal Reserve, such as data on inflation, retail sales, or wages, can cause wild movements in gold prices. Usually, if the data suggests that things are good for the economy, the stock market gains and gold loses, and vice versa. Also, geopolitical factors affect gold prices. For example, if tensions are increasing between the US and the China, that means there's a high chance of international trade suffering, and then businesses would take a hit. So again, the stock market might take a beating and gold would appreciate.
Well, it certainly must be exciting tracking the daily movements. Yuvraj, why do you think it's important for our audience to learn about the daily operations within the market?
Well, Ali, knowledge is power, right? And the more people understand about what's going behind the scenes, the better choices they can make with regards to their investment in gold. The dynamics behind gold are quite different from that of real estate, stocks, or other investment alternatives. It's a high-value, fast-moving commodity, Hence, the daily operations affect the gold market a lot.
Okay, great. Well, I absolutely agree with you that knowledge is certainly power. Becoming financially and economically empowered enables people to better handle their money with more finesse and grow their savings at a steady pace, which allows them to achieve future financial goals. Yuvraj, this moves me into our first topic, and that's the gold trade. Now, gold has a high rarity value. All the gold ever mined would fit into a standard suburban home, meaning there is an enduring demand for gold. Yuvraj, in what ways is gold an ideal investment for our target market at Nauggets?
See, the best thing about gold is that it has always maintained its value over the long term. For instance, let's say between January 1971 and December 2019, gold has averaged annual returns of over 10.5%, which is quite significant. Which also means that the price appreciation is a hedge against inflation and erosion of major currencies.
Can you explain this a bit more, perhaps with an example?
Sure. So think of it like this. I'm an Indian national living abroad who earns in US dollars. Now, in the last 15 years, Indian currency, that's the Indian rupee, has depreciated about 6% annually on average. So what that means is if I transfer money back home and make investments in, let's say, the best stocks, and somehow even manage to generate 15% every year, which, by the way, is very hard on long term, I'm actually earning only 9%. That's 15% minus 6%. So technically, I'm better off investing in gold in the long term. Also, in the last 10 years, Indian inflation rate has averaged around 6%, which again is on the higher side. Additionally, gold is not volatile like cryptos, for example, right? Hence, it becomes ideal for a target market because it's very stable over a long term and it gives you that peace of mind where you don't have to check your portfolio several times a day.
Yeah, gold definitely offers that stability factor, something that many young investors could afford to add to their portfolios, with so many of them dabbling in high-risk crypto assets. You know, a nest egg of investments that include less volatile assets like gold helps people shield from risk and gives them a well-rounded portfolio. Now, Yuvraj, when buying and selling gold, people have many different options. They can invest in gold bullion, gold futures, ETFs that own gold, mining stocks, even ETFs that own mining stocks. The choices are abundant. Yuvraj, why would you say that digital gold is the preferred option for investment today?
Well, in today's world, digital gold is gaining a lot of traction. It's a more convenient and cost-effective alternative for those who want to buy gold. I mean, investors can easily buy, sell, or even order physical gold to be delivered at a home with just a click of a button on the app. Also, there is no minimum limit to buy digital gold. Basically, technology has made gold, which was supposed to be a traditional investment, extremely convenient for people today.
Well, it's certainly becoming easier to buy and hold gold. However, with digital assets, there is always that trust factor at play.
True.
Yuvraj, how can our investors and or buyers avoid being ripped off online?
Well, there are several basic checks a buyer can perform at his end before investing into digital gold. First is compare the pricing with the current XAU USD price. It can be easily found via Google search. XAU USD will show the price in US dollars per troy ounce, so the user will have to check for the currency conversion as well. This quick check will help you find out as to how much premium a digital gold seller is charging. Second is read into the company's offering. If the investment is really backed by physical gold, is it allocated gold? Also, where the physical gold is stored. And also, is it insured?
Well, they're all great points and definitely things that I think we're quite transparent about at Nauggets. Yuvraj, this moves me into my next topic for you, and that's our partnership with Brinks Global. Can you tell us who are Brinks and why do we use them?
So there are broadly only three ways in you can store your gold. Number one, you can just keep it at home. Second is you can use a safe deposit box at a bank, or you can keep it in a secured vault. There are several private companies out there which provide vault services for precious metals, Brinks being the largest amongst them.
Okay, that's great that they're the largest global secure vaulting provider, but what is it that they actually offer us?
So the Brinks Company is an American private security and protection company. It's listed on the New York Stock Exchange. Its entity, Brinks Global, specializes in the secure transportation and handling of valuable goods throughout the entire logistics value chain. It also provides secure vault services for storage of physical gold across major bullion trading locations in the world.
And where are these secure vault services located?
So we at Nauggets, we have global Brinks account, which means as an investor, you can choose to store your physical gold at Brinks Vault across London, Hong Kong, Singapore, Zurich, Sydney, Dubai.
Okay, let's talk more about vaulting. Yuvraj, what happens when someone actually buys gold with Nuggets? Do they own one specific bar? And what happens when they sell it?
So when users buy gold on their Nauggets app, they can notice their cash wallet getting debited and the gold wallet being credited, which means on behalf of our users, we on the back end ensure that we are purchasing physical gold. So the user doesn't own a specific bar, but it does own the exact quantity of gold that he has invested in. Same way, when they sell the gold using their app, their gold wallet would be debited and their cash wallet would be credited. And these funds then they can withdraw back to their bank account. The gold of Nauggets community users is 100% insured and is stored in Brinks Global Vaults.
Yuvraj, you mentioned previously allocated gold, which is my final topic for you in this episode. What does gold allocation actually mean?
So allocated gold is fully purchased and owned by the investor before being stored in a third-party vault or a bank. Hence, it is the property of the investor. Unallocated gold, on the other hand, is not owned by the investor and is instead credited, which means it's the property of the bank, right? Because allocated gold is not the bank's property, its owner is considered safe from the bank's insolvency. That's why when buying gold, private buyers should opt for allocated storage and pay the storage and insurance fee if needed. Although allocated storage is usually inexpensive, but in reality, banks might charge a hefty premium for the same because it is strongly in their interest to incentivize gold investors to opt for unallocated storage. Now, in comparison, via Nauggets, users can invest in allocated gold, which is 100% insured.
And my final question for you, Yuvraj, what are buying and selling methods you'd recommend for our audience?
So I would highly recommend investing into gold using the digital route, but definitely at a place where your money is backed by physical gold. For example, at Nauggets, number one, you can buy or sell gold merely by the click of a button at the best retail price you can get. Second, your investment can be as small as $5. See, the problem with buying retail gold is if you walk into a jewelry shop, the smallest gold coin would possibly be a 1 gram coin, which at current price would be upwards of $60. And third is your investment is actually backed by physical gold. The gold is allocated to you and it's stored in the vaults of our logistics partners and is 100% insured.
Well, you're certainly making it much easier for anyone to get their hands on gold. Not only are we offering the convenience of digital gold, but it's also backed by physical gold. And as you said, 100% insured by our partner Brinks Global. Yuvraj, thank you so much for joining me on this episode. From buying and selling of gold to Brinks Global Vaulting and gold allocation, it's been fascinating diving into these topics with you. To many investors today, gold maintains its allure as a one-of-a-kind asset. If you want to learn more about making smart choices around your money management and investing in stable assets like gold, visit www.nuggets.com to get started. Thanks for listening.
Thanks for listening to the Future is Gold podcast. For links and contact details relevant to this episode, please see the show notes. Don't forget to subscribe to our podcast series so you'll know when the next episode is live. And follow Nuggets on social media for more gold standard content. Information contained within this series is general in nature and not directed to your personal situation. So please reach out to us or your financial expert for a more tailored approach. This podcast is a Story League production.